onto the subject, digital assets and tokenization. We've just done a piece of research recently called Tokenization Gaining Altitude. I think what we've taken from a number of these panels so far is that tokenization's kind of come up in different ways on each of those. And it seems to be that we're reaching a kind of mainstream state. Before I get on to the first question, just a couple of the key stats that we gathered from that survey. Over $300 billion worth of tokenized assets are now accessible globally. 90% of that is stablecoins. 33 billion of that is real world assets, but we expect that to rise up to $1.5 trillion by 2030. And now this is the really important point. 50% of the surveyed managers, this is across the globe, have deployed tokenization at some level, whether that's through proof of concept or through an actual tokenized product. So, Eoin, question to you. Can we now say that tokenization, digital assets, is in the mainstream?
No. I think it kind of depends. I mean, 10 years ago would have been the first time I bought any kind of cryptocurrency, right? But it was entirely experimental. And usually it was the tech guy or the engineering guy in your team had a fetish about it. Where we've come in 10 years is you've moved from retailers experimenting to institutions in the last 2 to 3 years in particular, really focusing on what's the next big thing. Because when it comes to digital assets, and this was referred on some of the earlier panels, they're already tokenized, they're already digitized. It's the pairing of instant settlement, movement of money like your Revolut account to the position is the piece that's missing. So I would say it's becoming mainstream, but it depends on who you look at and where you look at. And the who's are, if you're looking at assets, tokenization of funds is certainly a really progressive topic in the last 3 or 4 months in terms of conversation. Stable coins, definitely a topic of conversation. And if you look at some of the recent announced consortia, like the Stripe Bridge one for USD1, the Irish banks have gone into Quovalis. So stable coins and all those messages get into the human psyche of, actually, this is becoming a thing. But with the mainstream part of it, it's like a swimming pool with a different load of lanes. So it's mainstream for some, it's not for others. From a regulatory perspective, it's been referred to already, without regulatory clarity, none of this progresses. Where are we with regulation? MiCA finalized itself last week. We've had only 244 CASPs approved out of 2,000, right? So there's a lot of turmoil to come in that space. You have Genius and Clarity in the US, which is super. Fourth blockchain law in Luxembourg. Cayman have changed their mutual fund law, money market and VASP laws in June, all really enabling. But depending on which jurisdiction you're in, depends on how mainstream it actually is.
And I know you have a bit of a bugbear with MiCA as a term, because the C is just crypto, right? And everyone kind of associates crypto, digital assets with crypto. Are we still there, or have we moved past that now?
No, I think we're still there, and I'll tell you why. When I told my parents I was joining the board of a well-known cryptocurrency exchange, I had a very interesting reaction. My mother said, "That's where all the money laundering is." And I said, "No, actually, the US dollar is where all the money laundering is." And my father said, "Is that the funny money?" And then I said to him, "Well, where have you just come from?" He said, "I've just come in from doing the shopping in Tesco." I said, "Well, how did you pay?" "Well, I tapped my phone." "So you used a digital wallet on your phone? And did you tap your Tesco club card to collect points?" "Yes, he did." So there's different pockets of mainstream in different kind of areas. But MiCA as a term, I hate it. I much would have preferred if they call it the market in digital assets, because it's a much more identifiable term, even though everything is cryptographically presented, stored, and transmitted. The word crypto in itself just has a bitter aftertaste from some of the scams.
Thanks for that. Sarah, so when we spoke before, you mentioned that you've been hearing about tokenization for years, or we all have been hearing about it for years, but there is a case for it now. What do you think that case is, and what sort of examples have you been working on?
Yeah, I mean, so to put it in context, I'm a funds structuring lawyer. I have been working across hedge funds for nearly 20 years, but particularly focused on digital asset funds since 2017, so coming up for 10 years almost. And I would, I'd like to disagree with you, Eoin, and I know you wanted us to do that. But in terms of digital assets,
This is why David is between us.
In terms of digital assets and thinking about it from a funds perspective, I would actually say that digital assets are mainstream because 10 years ago, there was very limited infrastructure. There were very few service providers that were willing to service digital asset funds. There was a real education piece for regulators and investors. And comparing that to now, the majority of my and our team's hedge fund clients in particular, the majority do have exposure to digital assets within their portfolio. It might just be crypto derivatives. It might be a bespoke digital assets fund product. So I think in my world, digital assets are mainstream. Tokenization, I would agree with you. I think that the tokenized funds we've been hearing about, in particular over the last year or so, there's been some really high-profile launches out there. There's liquid and illiquid funds now which are tokenized, which are out there. But I think there's a long way to go for tokenized funds. Coming back to your original question, Tom, sorry, Tom, is that I've been having lots of conversations within the digital asset space about tokenization and thinking about tokenized funds over the years. And there's always been that use case, but there hasn't been the regulatory certainty. There hasn't been necessarily the technology to sort of permit it. And again, just having that infrastructure in place. But in terms of use case, so to mention a few, there's operational efficiencies, so you can have automated KYC, onboarding, instant settlement. So there's that piece. There's also increasing liquidity. So, being able to transfer your tokenized interest between approved investors. And there's also the distribution piece, which I think is really important because it's creating a new distribution channel in that you are potentially being able to accept smaller investments from a broader range of investors. So I think that use case has been there philosophically for a number of years, but now we are really starting to see new launches.
Thanks for that, Sarah. So on the last panel, Jamie was asking quite a bit around how is investor access increased or improved to some of these sports investments. And our survey showed that by far it was the principal driver in wanting to tokenize something was to increase the investor access. Is this where the alpha can be generated for a tokenized product versus a non-tokenized product? David?
I think yes. The simple answer is yes, but there are probably a couple of aspects to that. So certainly, and I think going back to the conversation around is it mainstream or not, I think it's mainstream, but to effectively what is for us as Invesco a new distribution channel. So we've this year we've taken on a US Treasury $1 billion US Treasury fund. But if we do a correlation between the holders of that fund and our traditional global liquidity products, there is no overlap. It is Web3. It is the Web3 ecosystem that are investing predominantly in these tokenized products. So I think that in itself is a new distribution channel, and which also comes with some challenges, certainly from a distribution standpoint, because it's a subtly different distribution conversation you're having with clients of that type versus the more traditional side. I think there are also then the aspects that Sarah just alluded to. There are capabilities that you can deliver through a tokenized fund that are either enhanced or not available in a traditional product. And it's those things, I think, that we need to focus on. Just because you tokenize something doesn't mean anybody will buy it. You've got to tokenize it for a reason. If you can deliver new capability or new use cases or new functionality that aren't available or are available at a better price or a better mechanism of engagement.
100% agree with that. So, Chuck, we're going to hop onto a slightly different subject. So,
I can touch on all these too.
you've co-founded Republic, right? So
10 years ago, yeah.
10 years ago. Was Republic always on chain, or was that something you pivoted to at some point? And can you just explain your thought process around bringing
I wouldn't call it a
investors
pivot. We got into blockchain in early 2017 because we wanted to do something a little bit different than what our other competitors were doing. So we've been doing it since 17. I actually want to back up on a couple things too. I also want to agree that it is not mainstream today. But on the stats you used, you said 33 million of RWAs exist out there in the world, like tokenized securities. So Republic this year alone has done over 100 million. That would be for securities like SpaceX before it went public, Anthropic, Anduril, ByteDance, etc. We've also tokenized a private equity fund for Hamilton Lane. We also made that one available to the masses. We restructured the security. The tokenization is not the magic wand that made that happen. It was just restructuring the security, but putting it on chain was important. That particular fund has a liquidity model to it, so if people came in for whatever $500, we had to send money back to them on chain. It's a lot more efficient. We also did a tokenized CLO fund for Galaxy Digital. So all this stuff actually exists out there, and that's what, definitely why it's not mainstream, because we've been doing this for a long time and basically busting our asses and hitting our heads against the wall, and it can't get out there. On sports, and I know a lot about this. I've been doing sports on the track for 3 years on it. Like we did Watford Football Club here in London about 3 years ago. They actually went through the whole like on-chain model for it. They returned the money to their fans, unfortunately, but that's a very long story for a different day. And we've done about a dozen other sport teams, mostly in the US since then. And we actually advised on Nathan Pillai's CLGP tokenization effort back in, that was like 5 years ago at least. So kudos to Nathan for bringing that forward 5 years ago, well ahead of the curve. But in sports, I'm not sure fans, and this is crazy for me to say this, I don't think fans actually want to own the club. That's pretty shocking. But the reality is they already have an emotional attachment to the team. And having a financial emotional attachment to the team is probably not very healthy. Now, I do think, and where this can all go, and I think, let's forget about things going on chain. It's going to happen. It'll be seamless. You probably won't even notice it when it does happen. You'll see some efficiencies like 24/7, 365 trading. You'll have better, lending and borrowing opportunities because they are on chain, and also staking opportunities. But I think where this gets really, really exciting for the future of finance is on the utility side. And that actually draws back in the sports and the fans and other people like music or art or whatnot, is you can code utility, rights and privileges, gating rights, things like that into the actual security. And it becomes another reason for the individual to own it. That can bring the fan back to the team, right? That can keep them interested in owning that financial piece of it as well. So I think that is a very untapped horizon in the blockchain space. And I think it's also going to come out in like funds too. Right? You have how many portfolio companies in these funds that you invest in? You're like, or if you're a fund of funds, they have a ton of different things they're invested in. Well, you start getting those companies put, say 1 or 2 utilities on chain in their security, and you own that as a fund. All of a sudden, you got 200-300 utility, and that's very valuable to your investor base, just like it can be valuable to a fan base. So that's where my head's at. I know it's probably like a little bit beyond the one-on-one stuff that we're trying to like tackle today, but it's super important to put out there.
Could I just tag on one thing? So I think what I completely missed at the start is it's not just for investment that digital assets exist. So things like verifiable credentials, the provenance of ESG claims, the provenance of charitable claims, all those are digital assets which have a whole other use case beyond investing, which I think is partially where you're going.
Exactly, yeah. So it becomes super important, I think, in the play. And look, a lot of people relate that to rewards programs. It's rewards programs on steroids, and it becomes a digital data play too. So as a large group, say you're a financial, whatever firm, asset manager, you have a few million active investors, and you can see what they're doing in like that digital realm. That's real valuable data too. You're gonna have a lot of people actually coming to them to be like, hey, we want to not only be part of your portfolio, but we want to offer up all this great stuff to your customers, your investors. And that's a super powerful thing, but it becomes efficient because it is on chain.
So Chuck, I had a look at Trustpilot and read some reviews from investors
Okay.
on Republic.
We've had over 750,000 people invest in Republic, so I'm sure there's some
particularly to do with private market investments, and there is a train of thought here. There were some unhappy investor experiences on there, but the reason I'm talking about them is not because they're exclusive to Republic. I think it's just how retail investing would work into that type of product, right? So, for example, I'm not going to bring it up on the screen, but one of them was talking about how they thought by clicking the button that they'd invested, and then they heard nothing and nothing happened. Or someone wanted to get their money back and they couldn't get their money back and no one responded to them for 2 weeks or whatever. So this is what the kind of experience I think that everyone kind of fears is going to happen if we open the doors to a broader set of investors. Now, you've had this brilliant run of kind of bringing all these different diverse types of products onto the platform, and you've got many happy customers. I'm just referencing a couple of things that I read because I think it sums up where most experiences are likely to go if we don't really think about the investor experience. How much thought went into that investor experience when you built that business, and can you just share some of the kind of key takeaways from that?
A lot of thought did go from like the regulatory perspective, but to be kind of harsh on myself and the company and the team, we weren't the greatest at customer support. We came from a world that was, there was no phone to number to call. It was all done digitally. It was all done over email. It was all done over a chat bot. We maintained that, and probably in hindsight, looking back, it probably could have been a little bit more open. But put in perspective too, like some of our campaigns have had upwards of 30,000 investors. There's always going to be, a cat in there that's a little bit upset. So we kind of take it on the chin, knowing that there's going to be, another campaign with something else at the primary or on the secondary side with another 10, 20, 30,000 investors. We just, take it on the chin.
Very well handled, thank you. Eoin, you've referenced before that you feel that every board should have some kind of member on the board that understands tokenization of digital assets, or that they should all have some level of education.
Yeah, so it's kind of tacking onto your point, right? So my experience of digital assets working with some blockchain firms and tokenized funds is the idea or the solution is the brainchild of a techie or an engineer. And it's brilliant, right? And it does what it says on the tin, and it's all rules-based, and there's smart contracts, etc. But they haven't grown up in a regulated environment. So they don't understand. I'm not talking about you personally now, right? But they haven't grown up in a regulated environment where you have to be authorized, know the rules, to play by the rules, and stay clean and stay on the pitch and all that kind of stuff. From what I can see currently, there's tremendous focus on product, bringing product to market, tokenizing it, finding the right partners. Excellent. There's very little focus on the actual governance piece, which can be the officers of the executive or the board. So ESMA came out with, and I appreciate I'm not in Europe today, but I operate in Europe. ESMA came out with the crypto competency idea, right, which is going to be added to the minimum competence code on the 28th of this month. And that's, so anyone going for a regulated executive position going forward is going to have to demonstrate some degree of crypto competence. And this is more applicable maybe to CASPs and digital asset service providers than the actual manager. But then equally, the board piece hasn't really been looked at. There's two authorities have come out with a view on it. One is the European Central Bank 2 years ago, February 24, where they said they expect banks to have an INED on the board who understands technology. Now, it's an expectation, it's not a regulation or a piece of law, but if it's an expectation by the EBA, you bloody well have to do it, okay? The FCA, in their fund tokenization papers, which have now finalized and are law, in the appendices, they also talk about the skills and the knowledges and the specialisms that the board members now need to have. Because when all of this is automated, on-chain, in a smart contract, somebody needs to know what rocks to look under, right? So in my view, there's a snowball coming where you're going to be looking for independent board directors who understand technology or tokenization or digital assets, and there's a genuine shortage. So there's a fear of missing out on getting yourself the best person, because it is a finite pool. At the moment, there'll be plenty of people who will get into it over the next 2 or 3 years, but right now it's quite closeted.
You can throw my hat in the ring. If they pay, I'll play.
I think, sorry, just
We'll
to
talk afterwards.
add to what you were saying, I mean, I don't think it stops at the digital asset service providers, because we're seeing increasingly now investment managers, they have existing products, they're seeking maybe to launch a tokenized share class of a product and so on. That's got to go to a fund board. That fund board's got to approve those digital asset service providers from a fund, from a fiduciary standpoint. So they've got to have that understanding to understand, because it's a different set of questions to some degree that they need to be asking versus the traditional world that they're coming from.
And you're right at the fund board level, but it's even worse at the management company level, because an awful lot of the delegates that are appointed by the management company, so the risks actually mostly lie with the management company, even though the product is being launched by the fund and that has its own board, but it's on two sides of the fence actually.
Can I expand on the regulatory part too? I think what I'm seeing is with a lot of the large chains, I think they're being forced into it, and in a good way. Their survival depends on them being in a regulated state. They can't always be in the utility side of things, and they see that there's a lot more opportunity on the regulated financial side of things. So that means going through where they were previously built just on the utility side, so they had utility standards coded into their chain. Now they're actually going through a process to create the security token standards. If you were to buy a security token and you have it in a wallet that doesn't have security token standards built into it, it would just look like a 404 error. So they are going through that with regulations in mind, and it's also being driven by large financial institutions. The big ones, you name it, they're doing it. They're telling them they have to. Hey, Solana, I know you're the meme coin capital of the world, but you guys want to work with us, you're desperate to, you're gonna have to go through X, Y, Z, and they are. You have SWE, I think, here based out of London. They're technically from London, but maybe not based out of here. Those guys are as regulated as it gets from a chain perspective, right? And I think the more they are, the more they'll be embraced by, these tall building owners.
Okay, look, time's flown. We've only got time for a couple of very quick questions. So this one's for David and Chuck. What is your advice to anyone in the room who's currently in an experimentational phase and looking to move into live implementation in this space?
I think very quickly, think about, if you want to move forward, you don't necessarily have to build all this yourself. There is the ability to put an operating model together with a number of third parties, or probably a number of third parties rather than one. But come up with a product that's got some genuine utility and value. Don't just tokenize something for the sake of it, or look what everybody else has done and do the same. Because as I mentioned, I think at the moment tokenized products are all chasing a relatively discrete set of capital, and it's very competitive. So have a genuine use case, and from an organizational standpoint, involve as much of the organization in that as you can, because we've gone through this a lot in the last year, and working groups with 50 people on and all the rest of it, but you're raising that educational level across your organization.
Good. I'd say, thoroughly review your infrastructure. Is it properly set up, and what do you need to do to get it set up if it isn't? And then the next thing, but maybe not the next, but is think about the customer experience. And if you're the customer, do you actually need that thing to be on chain? And if you don't, then don't do it. If you think that's a good experience and there's actual relevance to doing it on chain, then yeah, think about doing it. But go back to that infrastructure part. Do you have all the pieces in place? And think about what that cost and pain is going to take to get that out.
Okay, and last question, Sarah and Eoin. What one thing have you learned along the way that you wish you knew earlier on in your journey?
Oh, okay. I think what I wish I'd known. I think it's really about just thinking about from a tokenization point of view and actually translating that into fund documents. Which I love doing, is basically just taking it back to basics, as in what are you actually trying to achieve? Because I think sometimes we hear these terms, tokenization, tokenized funds, and you think it is something, and it's not. You just what is a tokenized fund? It's effectively, instead of issuing shares or interest, you get a tokenized form of a share or interest. So it's really just taking it back to basics, and rather than getting carried away with the trends, I would say.
What about you, Eoin?
I would say governance always needs disruption, whether that's new technology, new techniques, etc. But what I've learned the hard way is that disruption absolutely needs governance. And there's one or two things I've worked on. They had a brilliant product, brilliant team, but they just would not embrace that they had to play by the regulatory rules. So the disruption needing the governance, I should have moved on faster and saved time.
Okay, well, thanks to all of my panelists. If you do need any help with tokenization or digital assets, please come and talk to Apex Group. There's a final plug there. Thank you very much, everyone.